Hello everyone, welcome to Fearfully Greedy. In today's video I want to share a bit my recreational vehicle sector analysis, new findings, all that. We'll cover the history and origin, segments, the main players and market share, a bit of the evolution of that, then a bit of margin comparison and some key ratios, then a bit of balance sheet also about the main players, then product quality, what we could find. I'm not from the US, but we'll focus mostly in the US. Then the sensible market outlook, how things are looking for this next year, like this short term, but if we're facing a real recession, could have an impact. And then some valuation and thoughts and my decision. Also at the end, I will do a portfolio update of the public portfolio channel. So stay tuned for that. Okay, let's go to the history. So recreational vehicles started in 1884 in the UK with the Wanderer, which is the first purpose-built kind of RV, which was drawn by horses. Then the first gas one is in 1902 in France. Next up, in 1911, the tent trailers become a bit more popular everywhere in the US and in the UK. Then the first fifth wheeler, which is when you hook the trailer on the back of your car, is in 1913. So you can see a lot of innovation in these years, a lot of trying new things in the tens, in the first decade of the 1900s. Then 1920s is when the towable, kind of the trailers that we are more familiar with, the travel trailers, become dominant in the UK and in the US. 1931 is when the Airstream is founded. This is a very iconic US kind of maker, which now is owned by THO, so one of the main players at the moment. And between 1945 and 1960s is when a lot of the appliances become introduced to the RVs, and this becomes like an alternative way of living or temporal living there's, because it's somewhere you can actually cook, you can clean yourself, you can, I don't know, it's more livable. Then 1958 is when the first company that we will analyze is founded. It's Winnebago, which was huge at the time. Most of its history has been focused on motorhomes, which is the ones that have an engine in it. But since 2016, they have expanded a car with inorganically with some acquisitions to towables, which is the ones that don't have an engine. Okay, one of the big players. Okay, then we have Gulfstream, which is a very small player, mostly now focused on towables, so these ones that don't have an engine. And then 1980 is when THO gets founded. THO is very big on towables, but also motorhomes. It has like 50% of the entire market of RVs in the US and Canada. Then they also have operations in Europe. Only player that also has operation in Europe. Then we have Forest River, which is owned by Berkshire Hathaway. So the data for them is a bit hidden, so we cannot get into that, but we have some reports and other things that will help us navigate that. And then there's Rev Group, which it's only 30% recreational vehicles. They are more focused in motorhomes, so the ones with the engine. But yeah, a small part of the market, like today 7% or 8% of the motorhomes, which is even the smaller segment. We'll see that, okay? So these are the four guys, we could say. So what is the market? The market we will analyze today is the US and Canada mostly, where there are the manufacturers, where we will focus. There are independent dealers in most cases, where they have inventories, where they show the product there. And before summer, mostly is when a lot of the sales happen, right? It's when people want to go outside and get the new vans for the season, and the new camper vans and motorhomes and towables and yeah, park trailers and all that, to go to the mountains, to the parks. In the US, you have these huge parks, public national parks, that you can camp there. It's beautiful. I don't know. You will see the trends in sales and the trends for the future years. I think it's a sector with a lot of potential for the future. To see a bit of the numbers, this is from last year, 2021, but manufacturers and suppliers, they do 74 billion in revenues, sales and services 31 billion, camping grounds, that's also a huge market, over almost 750,000 of jobs, 50 billion in wages. So yeah, it's a very big productive kind of environment. We'll focus only on the manufacturers, so maybe here, right? So to understand a bit the sector, we have to know that there are two segments: towables, which is travel trailers, fifth wheelers, and specialty trailers. Being this one the main segment, this one is just the way you hook it is a bit different. These ones are slightly more expensive. And then motorized segment, which is anything that has an engine. The class A is those big kind of bus style motorhomes, which are the most expensive generally. Then we have the class C, which are these trucks or like vans, pickup, like with a very traditional kind of chassis. And then the class B is the one that is being more and more popular. They are quite expensive to start with because it's a full kind of vehicle, usually high-end vehicle like a Mercedes or something like that. But this would be a class B. And between these two segments, by units, 90 to 10, more or less, 85 to 15, more or less. We'll see it. As you see, we had a peak, this in units, okay? A peak that was in 1985 where close to 40% was motorhomes, close to 60% was towables, and since then it has expanded slowly because towables, as you can guess, are cheaper and more affordable. Okay, we can see the full evolution of units, right? Coming from less than 100,000 a year to next year we'll have 600,000, which was last year. But we can see the trend that motorhomes have had their highs and their very lows in the financial crisis. Of course, there are much more expensive vehicles, so they suffer maybe a bit more in those times. But yeah, you can see that the expansion has been mostly in towables. This by revenues. In 1994, we had more revenues for motorhomes since there are more expensive vehicles. And today, you can see it's 70%, close to 70% towables just by share amount, and then motorhomes will be the 30% remaining. In 2022, it's expected to do 21.6 billion in revenues for manufacturers of recreational vehicles. The other billions, the 130, 140 billion that they say, is for all the adjacent services that we saw before. Then, who are the biggest players? I told you it was those four, and kind of, it's five. But in motorhomes, we have 4 players. In towables, we have 4 players, which 3 are the same. Very easy to see. This overall, okay, Gulfstream and RevG, they share. So as you see, RevG, which is the smallest one, is in motorhomes. Gulfstream is mostly in towables. They do both, but in very small amount. Then we have Winnebago, which is this older company that was mostly focused on motorhomes that now has acquired a few brands and then has expanded its market share a lot. We have Forest River, which was acquired a lot of years ago by Berkshire Hathaway, which has close to 40% of the market also, and Thor. So these would be the 2 big dogs and then a smaller dog that is barking, we could say. So market share evolution, this overall, so total market share, we can see that Thor, which was a weird dog, has been losing a bit. We'll see where it's losing a bit. Forest River is even maybe losing a bit. Okay. Of course, Winnebago is coming from 6% to 12%, so it has doubled its market share since 22. Inorganically mostly, but also organically. Also, well, we'll see why. And the other two have still been very small dogs. Gulfstream is picking up a bit, but in very small percentage points. RevG is even decreasing a bit. Okay, where they are growing. So we can see Thor in motorhomes, it's growing its market share a lot. So now it's 50% of motorhomes, coming from less than 40% in 2019. Forest River is losing a bit of percentage, and Winnebago is staying even. So close to 20%, close to 20%, like mostly even. Um, RevG, I said, is a smaller player, like 6-7%, and it's staying even or losing a bit. For towables, what we can see is that Thor and Forest River are losing what? That's my analysis. Winnebago is gaining. Okay, all this data. Okay, do your own research, but it's coming from the 10Ks from everyone, where they share a bit of public information. Some research, but I will show you some picture of the prices that you would be paying for for research, which if you remember the coal analysis of the coal sector, met coal sector, it was ridiculous prices for this public information mostly. Maybe they have some more detailed things, but I think this is pretty good. It's also free. Also, if you want to help her out a bit, subscribe and like the video. Thank you. It helps keep me motivated. Okay, and then if we see inside each group of vehicles, we can see that what's happening, what vehicles are being sold more or less. So in overall, you can see that travel trailers, it's even growing. So the biggest segment is still growing. Fifth wheel maybe even going down a bit. Here it's hard to see, so I took out the two big segments, so we can see what's happening on the bottom, because it's motorhomes which have less volume by unit but a lot of revenues. So we can see that Class C, okay, Class C is the trucks, the one that look ugliest. It's falling a lot. Then we can see that the big motorhomes, the huge bus ones, are also going down a lot. And we see like a silver lining, which is the Class B, these ones, the ones that look cool, that people take photos by the beach and that. Those ones are growing a lot, so they are trendy at the moment. Folding campers and truck campers are folding for sure, it's going down, and truck campers maybe even. They are not moving a lot. Okay, so we can see that Class B looks good, travel trailers look good. Everything else is kind of going down. So who makes the best RVs, how we could infer that, and who has the most efficient operations? I would say from previous video, revenue growth can tell us a lot by who's doing the best product, but I also found a review site that might help us a bit, have some idea. Also, getting into that, getting in all the brands that they have, it was a way to also analyze how they have their business set up. What if they have a lot of brands or not. We can see that Winnebago for RVs, it has only 3 brands. RevG, which has a tiny percentage of the market in motorhomes, has 5. Thor has more than this. Like, these are the biggest ones, but they even have more than this. So it's a very scattered kind of public offering. Like, any effort that you do in promotion and putting your brand out, okay, you can say everything is Thor, everything is Thor. But I don't know. No, I don't think everyone that buys a Dutchman knows that it's from Thor, or Valai knows it's from Thor. So it's harder to do some marketing. I think marketing dollars invested are much more efficient in Winnebago. That's something that it's very, very clear, but I don't know, maybe needs to be said. For example, this Airstream, which is those very fancy and nice looking ones. Forest River also has a few ones, but not as many as Thor, so maybe a bit more centralized. Gulfstream also only has a Gulfstream, which I think it's the best way to go about it, like centralized. And say, of course, you don't want to lose Newmar and Grand Design, but at least you have a brand for motorhomes, a brand for towables, a brand for specialized kind of other motorhomes. I don't know, people know what to look for, and if they have a good experience, the brand grows. Okay, here it's harder to see. Then, so I went into rvinsider.com, which is blocked in Europe, but managed to get in, to acquire, get some of the reviews there. Okay, so I got all these brands from everyone. I got the full score and divided by unit, right? So Winnebago, with over 2,000 reviews with all the brands, it's the highest brand, it's the highest rating. Thor, which has over 7,000, has 3.6, which is middle of the pack. We can see a big difference, which makes me suspicious that people tend to rate higher dollar amount items. Like motorhomes are more expensive, so more dollars can be invested in them. So they tend to be better products at the end. So that's why maybe we see difference. RevG and Winnebago have a higher percentage of motorhomes, and only recently, since 2016, Winnebago has travel trailers. So that could be something to have in mind. Then Thor and Forest River, they have 90%, close to 90% travel trailers, and Gulfstream over 90% travel trailers. So maybe it's that the difference in ratings. But today, so the ratings is over the last years, over a few years. But today, Winnebago has 84% travel trailers. Okay, so they are there. They are pretty close, and the rating is not going down a lot. So could that be tell us that they have the better product, the best product? No, but it's a sign. Like, I'm not in the US, so I cannot be checking in parks and have people show me their vans and which would be weird. But it's one dot of the data. Okay, we can see it here. Like 84% is travel trailer and fifth wheel, so 84% today is towables, but they have the highest percentage from the three bigger guys. Highest percentage here. Forest River only has 6% motorhomes, and here they only have 10% motorhomes. Okay, so some key metrics, so we can see how efficient the operations are. Some are 5-year average. They are from or 5-year growth in revenues. Some are last year's. I will tell you. First, revenues 5-year growth percentage. We had 24%, 24.1%. So Winnebago is top one. Then gross margins today is also top one. EPS on the last 5 years, so this growth, 22% on Thor, 38% on Winnebago, and minus 18% on RevG. We can start to see that RevG is a bit on another league, maybe, but that can also be because 30% of RevG is recreational vehicles, and everything else is other manufacturing, but also vehicles, but usually specialty vehicles and other things. So those business could be worse. We don't know. And then interest to operating income. So we know a bit how leveraged we are. We can see that we always has a bit higher payment percentage of operating income on the last year. Return on invested capital, very nice one and very decent one percentage. Then capex to net capex, I graphed like what I think it's a reasonable capex, because capex can change a lot year by year, but like a normalized capex to net income, we can see that 12% of that would be of the last year's net income, and 16% is for Thor. Then enterprise value to free cash flow normalized, so we can see it how much are we paying at the moment, enterprise value and free cash flow normalized, because I don't think last year is like normalized. We had a very good 2021 and probably a very good 2022 also, but 15 times, 23 times. So by no means I think this, like, nothing is saying, oh, this is 3 times earnings. It is ridiculous. 50% dollars, not sure if we have any of them here, but definitely we can see that RevG, for what it is very expensive. Then let's check a bit balance sheet and other things. So debt to equity, we can see we're under 1 on Winnebago, which I like to see. So I don't like debt so much. I think it's good to pump a bit the throttle, but not so much that it can crash us. So then debt to EBIT, so how many years it would take of EBIT to pay the debt. 2 times here, 2.8, these minimum differences, but 19 times. I don't like that. Current ratio, so how much money we have in current assets to current liabilities, 2 times, so the higher, better. Then long-term debt, so how much debt outstanding we have to cash. Okay, so we have just 2 times debt to the amount of cash we have on the last quarter, and here 6 times. This metric is maybe very conservative, but I like lower the better. Then retained earnings, this is something that Buffett has talked about a lot, so we want to see this going up and up and up and up to the sky. And these 2 graphs look great. Here we have an example of not ideal, right? So some years we put some retained earnings, some years we take out some, right? So we don't like that so much. Can I form an educated outlook here, like how the sector will look in a few years' time? Also, can I value these companies at all? Let's see. So a lot of people are talking about recessions, what could be happening in the next few years. And let's check history. So what recessions we have had. So on 1988, we had a recession that lasted 4 years to bottom and then a couple years to pick back up, right? If we see the trend, this is going up, right? No, not looking about it, but there have been a few recessions. In the .com, we also had a few. So on 1999, we had the highest level, 2 years to bottom, and then a couple years also to get back to those levels. So we always recover pretty quick, okay? Minus the financial crisis. So in 2006, we had the maximum, and then it took 4 years to go down, okay? If we think like this, so on the 4th year we went up, but 1, 2, 3, okay? We had minus 58% loss on units, so this on units, and then it took 10 years. Also on the 10th year, counting this as the first year, 10th year, we got back to the same levels. So eventually we get back to the same levels, but 10 years is, for most investors, is a while, okay? Fourth is that we had an inventory crisis kind of in 2017, where inventories in the retailers were too high for the sales. I also did an analysis on that, so we'll see it. So it took a couple years to normalize that, and then we went up. We had the COVID situation, which was maybe a bit of a non-factor. We were starting to recover, but then 2021 it exploded. So we had the best year ever. And this year it's looking that it will be around here, right? We'll see with the pronostics, but around here. So what can that imply? Okay, the average recession, so if we grab everything, would say that it would take, this would be 2022, 23, 24, we would bottom on 24 if we have like a normal recession in sales of shipments by units, and then it would take like 6 years to get back to the same levels, okay? 6 years is a while to get back to the same kind of production that we have at the moment, but I think both Thor and Winnebago and Forest River would be fine. Forest River, of course, like it's not going under. Berkshire is not going under. Winnebago is the smallest company, so they could have the hardest times, but also Winnebago is the one with highest margins, less levered, so those things is also important to take in mind. Then in the worst case scenario, we have another financial crisis, a very long recession that takes lots of years to recover, or we could have even worse, of course, but the worst that I have data for is this, so 58% loss in units. How would that look like for Winnebago and Thor? Is that at the moment this is 2021 units, close to 70k for Winnebago, 230k for Thor. In the worst case, we have a 58% loss. We go to 30k, close to 30k, and 100k for Thor. You see here units, but here you can see that gross is not gross, it's like operating profit per unit if we have these numbers. So at the moment, in the last year, in 2021, we had 3,800 of profit per unit in Thor, 5,700 profit per unit in Winnebago. If we go to the worst case, 100k and 30k, 100k we have had a few years ago for Thor, which of course operations now are quite different than at the time. This was like 2016, which they didn't have the European production segments, so very different size, and also probably the company has grown quite a bit, so stopping or pausing some part of it can be costly. So probably not exactly here, but we have that. For Winnebago, since they acquired the tools, we don't know. So we never had these units with the full operations. So we don't know how much the unit operating profit would be. In the average case, we do. So a few years ago, we had 48k, so we know how much profit was there. So around $3,300 and $2,300 for Thor. I think to extract from this, so I think in the worst case, they will probably lose some money, but I don't think they go under. They have many levers to pull from, and in an average recession, I think they still make money. So I think we have positive cash flow, right? So my guesses, not financial advice. Think what you want, but if you take a bit normalized capex or maintenance capex, if you get to the numbers, you take revenues and with the maybe a lower dollar per unit and also lower margin, maybe 10% margin on that revenue, and you take all the fixed costs. I get to, in the average case, they make a few million, and in the worst case, they can lose a lot of millions, especially Thor if they don't stop everything. But I think they have levers to pull to keep it very contained, the downside. So I think they are not hugely leveraged companies. Okay, another thing that is important is to see inventories, because this is like the pool that we keep filling. So if the pool is full, we cannot fill it, even if there's a lot of people taking water out at the end, right? So we cannot, at the end, what people buy, it's what we'll produce eventually, right? But to see how full the pool was in 2021, it was clear that we were gonna have a ridiculous good margin. This the inventories for motorhomes and towels for Winnebago, and it was at historic lows, very low. Same happened with Thor. This overall, both all the segments, but yeah, inventory was at the lowest ever. If you see the percentage of inventories on the right, for example, Winnebago likes to keep it at around 40 something percent, and Thor likes to keep it at around 50%. We're at those levels. We're at those levels now. For towables, for Winnebago, we're at those levels, but maybe for motorhomes, we can still crank up a bit the inventory. So maybe in the next few quarters, since motorhome is the bigger segment for Winnebago, I think those can bring a lot of revenues, extra revenues that maybe Thor doesn't see. On absolute terms, Thor gets more from the motorhomes. They sell more units than Winnebago, but on relative terms, looks better for Winnebago. Okay, we can also, another thing, we have the inventory, which is like the pool, and we have the backlog. So what is ordered, and this most cases this becomes reality. So we're like down 13% in backlog from prior year, but the motorhomes were up. So people want more motorhomes because we haven't replenished. So that's why I think in the next few quarters can look very good for Winnebago still. And for Thor, we had it's staying flat. So the total backlog is staying flat, more or less. So what does it say? I don't know. This from July numbers, this from April numbers. I think if these were July numbers, they reflect more this. And the drop in deliveries, in final sales to consumers of recreational vehicles, they seem to stabilize next year at around 30%, the tops of the 600,000, which is still a very nice number. I think they are still very profitable. Okay, so this a bit where we were saying a lower inventory of motorhomes in relative numbers benefits more Winnebago because they have 40% of revenues coming from that compared to 30% for Thor. Okay, so how it's looking, this from RV Industry Association. They have some free information. If not, you can subscribe to them for, I don't know the dollar amount, but great information. But with the free information, we can do a few things. If you see 2022 was looking even hotter than 2021, which could be crazy, but still the forecast, since the inventory levels were catching up, they were thinking about that on the last half of the year we would have much lower and eventually have a end number lower than 2021. Okay, so we can see the steep drop in July, like close to 40%, 37%. Probably in the next end of the year it stays like that, and since usually we have bigger volumes here, lower volumes here, it will be slightly lower than last year. Okay, we can see the exact numbers. Silver lining, motorhomes are up, so motorhome are still looking good. So for Winnebago that can be great. Travel trailers down 37%, total minus 33%. Okay, year to date, if you see, we're still up, but we expect last part of the year to have a much lower number. Okay, latest. So the forecast, this is some RV road signs makes this forecast that tend to be pretty accurate. They expect 550, so a 50k unit loss to 2020 year total units per year. Okay, that's 8% less. 8% less is a great year. Anyway, the main concern is 2023. So next year, since we will have stabilized inventory, the main thing is we'll probably sell what gets sold. So we'll just replenish the inventory. These things take swings up and down. But if 2023 were in full recession, then we get directly affected by it. So there's an inventory to smooth that curve. So that's a bit what we can expect from the sector. Outlook and valuation. So we're today at 4.6 and 4.3 EBIT to 2022 numbers, and my guess is it will be around 6 something, 6 times EBIT 2023 numbers, if they become what everyone is expecting. And then for free cash flow, we have not the best conversion, so it's much less. So 10 times free cash flow 2022, 9 times free cash flow 2022 for Thor, and around 14 and 12 next year's one. This screams super cheap. No, the market is, there are a lot of very expensive pockets on the market, but I know cheaper things than this. But well, I've done some research. I don't feel I'm an expert in this area, but if I see this going down a lot, like say there are a few quarters next year that the unit volume go down, but I think it's manageable by them, and the stock tanks, I can pounce. I can be confident that both are great companies, and I like the outlook 10 years in the future better for Winnebago. I think it's a slightly better company if we see that. So I did some back of the napkin valuation, like no models. I don't do big models anymore. I don't think they are helpful. Maybe for margins and other things, but keep it simple, guys. I think fair valuation is around $70 per share on Winnebago and then $80 per share on Thor. That becomes 2.4 billion for Winnebago, 4 billion for Thor. There's some debt, but to keep it simple, okay? It's at 58 today and 82 today. So I think we have a small discount in Winnebago, which a bit higher outlook for the future. But as saying, am I convinced? I'm not convinced. This is not a 1 foot jump, at least for now. Like for me, I will keep looking into it. This is a first showing of what I've seen in the market, my thoughts. I will keep analyzing it, see what I think in a bit of time. Maybe next video I tell you I bought Winnebago or Thor. But for now I have other ideas that I like better. So I will bring those once I get into them in the next video. So how is the portfolio looking? I did some moves, so I sold out of Shinoken, not because I don't like it. I think it's a great company, but management is tired of maybe of the low valuation and is trying to take it private. Okay, so with some private equity. So they did a management buyout of a tender offer at 1600, and I sold at 1595. Right. I'm a bit sad because I would like to hold Shinogen for a long time, but I think it will go through, so no point in waiting, and I just sold. If it doesn't go through, this will fall, probably. So if it doesn't go through or they offer a higher amount, I don't know. It's hard to guess. It's hard to think about all these things. With some of that cash, I added 3K to Naked, so I doubled the position, so it's a 100% increase in number of shares at 148 GBX, which is the current price, more or less. Yeah, Naked will probably fall more or not. I don't know what will happen, but at these prices, I'm still convinced of my thesis. But maybe if I keep pouring money into it, we might have 90% Naked at some point. So probably I won't pour anymore, but I said, I will keep analyzing the best options possible and keep telling you. I also post in Twitter every time I do a move on the same day, so if you want to be updated, go there. Also, there's an Excel in the description that I update all the movements also in real time, and you can see the valuation on real time. How the portfolio is looking today is on 31st of August. It's 27k, like a 2% appreciation, so I made mostly no money still. We're over 2 years into the project, which I hope 10 times that, 20 years, 30, 40, as long as I can. I would like to keep this portfolio updated and showing people. But yeah, we have Warrior Metcall on the biggest position, close to 40% of capital. Wine and Naked Wines is 20%. Baba has appreciated a bit to 14%. Ra International is 5%, which until I see some development, some news on it, I will leave the position as is. Interrally will probably become a 0, but until the bankruptcy and claims and debt claims come through and see what's left, I will put it at 0 when it's time. But I have 5k euros at the moment, which is 18% of capital, unemployed, like not used. So I'm seeking, like, spending a lot of time seeing a lot of stocks, reading a lot, trying to get some new ideas from friends and super investors and investors, and from my own sourcing and screening. I don't want this cash to be this high for a long time, but it's okay to sit with some cash and think things through. Could I put it in Naked Wines and make it this a 40% position? Yeah, I could. It's possible, yes, it's possible. But maybe I have some other ideas, and not for diversification reasons only, but yeah, I think 4 or 5 positions is okay. Like 20% positions, I like it at there. We'll let you know as things move on. Okay, so well, that's it. Thank you for watching. If you like the content, please like and subscribe. It helps keep me motivated. And we will let you know my next step on the next video. Okay, take care. Bye bye.